All right, so I did test this and the audio should be working this time. So what we're going to look at today, we're going to talk about, I think we didn't quite get to talking about exempt versus non-exempt employees. This is, these are all, the exempt portion is whether or not somebody is exempt from the overtime and minimum wage provisions of the FLSA. So they'd still be covered under like the child labor provisions and of course the record keeping provisions, and this is on an individual employee basis. So this is not an enterprise wide classification. This has to do with the duties of the individuals within that organization. So we want to get that distinction down, because if somebody is exempt from the overtime and minimum wage provisions of the FLSA, generally speaking, we think of these people as salaried. You know, somebody who gets a set amount of pay per week or per 2 weeks or month or an annual salary. But that's not exclusive to exempt employees. There are some non-exempt employees. So these would be employees that are covered by the minimum wage and overtime provisions of the FLSA. There are some non-exempt employees that are salaried as well. So in those cases, and we're going to cover a little bit of that in today's class, because they're kind of a special case. This is somebody who ordinarily gets a salary, but if they work over 40 hours a week, they're entitled to overtime pay. So then we get the complication of, okay, well, how much are we supposed to pay them in overtime if they're salaried, right? So we're going to do some of those calculations, but first we need to kind of get that distinction between an exempt employee and a non-exempt employee down. Then we're actually going to start doing some more calculations here. We're going to start talking about, and is this, I can never remember which one's actually, I guess that one's not working. Then we're going to talk about how we calculate overtime. And there are actually a couple different ways of calculating overtime. We're mostly familiar with one of the ways, the ordinary, the common method of calculating overtime, but there's this additional method called the overtime premium approach, which is used when we are having to calculate overtime pay for those salaried employees who are entitled to overtime pay. Both calculations end up with the same result, but they're just two different ways to get there. We're also going to look at how do we calculate overtime if we have an employee who has worked different jobs at different pay rates during the same pay period. So for example, we'll think of the restaurant employee. They're a server, or maybe not a server, that's not a good example. They're a greeter for half of the time, but then they worked in the back room maybe as a cook for the other half of the time, but they worked overtime, and they're two different rates. So they're $12 an hour as a greeter, but $14 an hour as a cook. How do we calculate that overtime? Again, we have a choice in how we're going to do that. There are three different ways, and we're going to go through those calculations. We're going to look at then in more detail how we figure out how do we calculate a salaried individual's hourly rate. So we're going to go through the steps. There are 5 main steps to do that. And by the way, I guess let me mention this while I'm thinking about it, because I tend to forget then when I say I'm going to mention it. These are images from prior classes that I had written on whiteboards and taken a picture of. In the modules in Canvas, there's a link to all of these whiteboard images. You may find them helpful. They're like calculations. A lot of times they're steps. I've kind of broken it down into steps as well. So when you're doing your homework, some of that may be helpful. It's in there. It's like in the very first module in Canvas. I think it's under the like miscellaneous information and that. then we're going to, and this is probably the most complex part of this particular class period, is how do we calculate if somebody is salaried, but they work a fluctuating work week, and by that I mean they work 20 hours this week on a regular basis, 20 hours this week, 60 hours next week, 25 hours, 52 hours, like they're all over the place. There are 3 different methods for calculating the overtime rate and thus the gross pay for those individuals. So we're going to go through those 3 calculations. And I will tell you, I'll give you a little heads up. This BELO plan, if any of you have started to work on your homework, you'll have at least one problem in that homework concerning a BELO plan calculation. And this is one of those areas where I probably get the most homework questions from students. So just the heads up on that. Then if we have time, since we're kind of trying to play a little bit of catch up from last week, we want to talk about some other ways that individuals can get paid. If they're not paid on an hourly basis, but they're still entitled to overtime and minimum wage, how do we do that calculation? So there are some employees that are paid on a piece rate basis. That means they're paid by the number of products they produce or the number of inspections that they perform during their work day, but they're still entitled to overtime and minimum wage. So we're going to go through some calculations on how we figure out if they've met that minimum wage and overtime requirement. And then we're also going to touch on some special incentive plans like bonuses, commissions, that sort of thing. So that's what I'm hoping to get through today. That's a lot of material. So bear with me here. If we don't get through it all, we'll continue on Wednesday. Fingers crossed, we'll continue on Wednesday. So let's talk first about these exempt and non-exempt employees and what exactly we mean here. So exempt means that they are exempt from some or all of the FLSA provisions. A lot of times we call these white collar workers, and like I said, we sort of equate it with salaried individuals, but that's not exclusive because there are non-exempt workers that are salaried as well. But these exempt employees means they don't have to get paid $7.25 an hour for minimum wage, and it means that if they work over 40 hours in a week, they don't have to be paid that overtime rate, time and a half for those hours. Now, employers are not allowed to just like the independent contractor versus employee issue, employers are not allowed to just classify workers as exempt or non-exempt. It has to do with what their duties are, and a lot of it has to do with whether they're supervising other individuals. And we're going to go through these classifications of individuals, just in kind of summary: executives, administrators, professionals, business owners, highly compensated employees, computer professionals, creative professionals, outside salespeople. These are the general categories of individuals that can be classified as exempt. So they don't have to be paid $7.25 an hour, but they do have to be paid a minimum of $684 a week. So they do sort of have a minimum wage. It's just not based on their hourly rate. They have to be paid those $684 per week in their jobs. But if they work 80 hours a week, they don't get any more. They're not entitled to any more than that $684 a week. Now, in reality, a lot of these classifications, they're going to be making more than that anyway, right? Executives, obviously highly compensated employees, right? That just in its name would show that they're going to be making more than that $684 per week. But that is the minimum that they have to be paid. The only time where they might be paid less than that minimum amount is if they start work in the middle of a pay period, or it's a shortened pay period because it's their first, or last week of work. So for example, if they, let's say they're on a weekly pay period and they start on Wednesday. So they only get paid for Wednesday, Thursday, Friday. They're not going to get that full $684 because they didn't work. They didn't even start. They weren't employed on Monday and Tuesday. Conversely, if it's their last week of work, say they ended their work, they were terminated on the Wednesday, then they're not going to get paid for Thursday and Friday because they're no longer employees. So that would be the only time when they wouldn't be entitled to that full $684. Blue collar workers, we usually think of like manual laborers. So there's this, this, I don't know if you're familiar with those two terms, white collar, blue collar, but white collar is kind of a colloquialism for white collar would be for administrative type positions or exempt positions. Blue collar would be for those who work on an hourly basis. If they work on an hourly basis, they're always going to be entitled to overtime pay for hours over 40. Also, there are specific classifications of workers where they might fit into one of these categories, but they're specifically exempted. So police officers, emergency medical technicians, firefighters, paramedics, licensed practical nurses, not RNs, but LPNs, these individuals would be entitled to overtime pay in their positions, even though they might fit under one of those other classifications. You might call them professionals, or they might be technically highly compensated, but they are entitled to overtime pay. So let's take a look at these classifications in a little bit more detail here. So executives. If their primary duty is managing a department, managing other individuals, they supervise 2 or more employees, and they have the authority to hire, fire, or promote other individuals, they're considered to be an executive. They would automatically be classified as exempt, wouldn't have to pay them overtime, wouldn't have to pay them $7.25 an hour, but they do have to make $684 minimum per week. Administrative. Primary duty would be office work, and they regularly use their discretion and independent judgment. So a lot of bookkeepers could be classified as exempt employees. That's a pretty broad range, any type of administrative type position, secretarial, that sort of stuff. Professional work requires advanced knowledge of science or learning, and the knowledge is acquired by prolonged course of instruction. Think CPAs, lawyers, architects, those types of professions. It requires advanced knowledge, and it's specific to that profession. Business owner, an individual who owns at least 20% of the equity, and they're also working for the business. So not that they're just investors, because there are lots of people who just invest in businesses and they don't actually perform any services for those businesses. But these are people who are performing services for those businesses, and they actively manage the business operations. They would fall under that exempt classification. Highly compensated. So an individual that earns $107,432 annually or more would be in that classification. They perform non-manual work as well. So there are a lot of professions where you may be making more than that $107,000, but if it's manual labor, think plumbers, electricians, that kind of thing, then they really wouldn't fall under that category because they're performing manual work. And they regularly perform one of the exempt duties of an executive, professional, or administrative employee. So they're in sort of the management type of role. Computer professionals are their own category. They have to have, if they have a salary of at least $684 a week or $27.63 an hour, duties consist of system analysis techniques, design of computer systems or programs. So that would be another classification. Creative professional requires invention, imagination, originality, or talent in an artistic or a creative endeavor. That's pretty broad. And you could probably think of situations where that could be classified for just about any type of profession, but I think we all know kind of what that means. So artists, musicians, those sorts of careers. And then outside salespeople, their primary duty is to make sales or obtain orders for services or use of facilities. They are regularly away from the employer's place of business. So they don't really have an office in the office, right? They are out doing all of their work outside of the business. Also for this one, there's no salary test. There's no minimum there. So these individuals would be considered exempt. And for a lot of the calculations that we're going to do today, the second half of today, we're going to be talking really about, the calculations for exempt individuals are pretty simple. We are going to talk about how we take that annual salary, though, and figure out on a per pay basis how much we're going to pay them. But for these individuals, we're not talking about a salaried individual who's entitled to overtime pay. Okay, we're talking about individuals who are not entitled to overtime pay for hours over 40, and that their minimum wage is on a weekly basis, not on an hourly basis. Questions about that? Okay, so let's look at, okay, let's start getting into some of these calculations. Let's see what slide 38. All right. So we've got some, in order to compute somebody's salary, we need to know how often they're paid. This information is going to come in handy as well when we're calculating their federal income taxes withheld, by the way. So these are the most common types of pay periods: weekly, bi-weekly, semi-monthly, and monthly. So, and employers, by the way, can have different pay periods within their organization. So think about maybe a construction company. They may pay on a weekly basis to those who are actually doing the manual work, but then executives get paid on a monthly basis. It's possible and allowed to have multiple pay periods within an organization. It does increase the complexity for the payroll clerk, obviously, and for accounting, but it is possible to do that. So these numbers here in parentheses indicate the number of pays that occur during a year for each of these pay periods. So if somebody's paid weekly, there are 52 weeks in a year, so they're going to receive 52 paychecks in a year. If they're paid bi-weekly, that means they're paid every other week, and this is a very common form of payment. Every other Friday, that's pretty common to see. Each pay period is going to have 80 hours in it, and for the weekly, each pay period is going to have 40 as the base pay before any overtime might be calculated. Bi-weekly, so 80 hours, so every 2 weeks. Now be careful because it's really easy to confuse bi-weekly and semi-monthly. Semi-monthly means there are 2 pays during the month. So there are 12 months. If you're being paid twice a month, obviously you're going to have 24 pays per year. And then monthly, obviously we've got 12 months, so you're going to get paid 12 times a year. Okay. Let's see if there's anything else I want to say about those. Other than just be careful, like I said, that bi-weekly and semi-monthly is really easy to confuse those two. But it does lead to different calculations, right? 2 people with the same annual salary, but one's on a bi-weekly pay, the other's on a semi-monthly pay, their paychecks are going to be different, even though they're making the same amount of salary. Okay. All right. So what happens when we've got somebody who is working in multiple jobs for the same employer at different pay rates, but they also work overtime during that pay period? How do we know what to pay them in overtime? There are 3 ways to do this. The first way and the third way are the easiest. The first way is we can pay just at the higher rate. So for example, if we have somebody who's making, so job 1, they're making $10 an hour. Job 2, they make $12 an hour. They worked, let's say 20 hours at this job and 22 hours at this job for a total of 42 hours. They're entitled to 2 hours of overtime. What we're talking about here is, how do we determine what the overtime rate is? Which one are we going to pay them at? The first one, we're just going to pay them at the higher rate. So in this case, even though they actually worked, I'm going to reverse this so that it's a little different. Or actually, let's do this, 21 and 21. So even though they worked 1 hour of overtime at the $10 an hour rate, we're actually going to pay them 2 hours of overtime at the $12 rate. So their overtime rate for each of these, $15 an hour. For overtime, this is times 1.5. It's not the rate. It's this times 1.5. Right? And then the 12, again, times 1.5 is $18 an hour. But in this case, we're just going to pay them those 2 hours of overtime at the higher rate. The higher rate is $12, so they're going to get 20 hours at $10 an hour, 200. And then they're going to get 20 hours at $12 an hour, which is 240. And then they're going to get 2 hours at the overtime rate times 1.5 times $12 an hour, which is our $18 an hour, so $36. Can you all see that? Sorry, I know that's kind of low. So 476. Try to get that down a little bit. So 476. So we paid them at the higher rate, even though they worked 1 hour at the lower rate in overtime. So this is option 1. We get $476. I'm actually going to skip to option 3 here first because option 2 is the more complicated way. The second one is we can use the overtime rate based on the rate for the job performed after the 40th hour. So we happen to know that they worked, get this chair out of the way. We happen to know that they worked 1 hour of overtime in each of these jobs. So we're going to do, again, 20 hours of regular time times $10, 200. 20 hours times $12 equals 240. And then we'll have 1 hour of overtime times 1.5 times 10, so $15. And 1 times 1.5 times 12, $18. So we're going to come up with a different amount here, and this is the third scenario. So what do we have here? 3. Get that right? 3. So 1, 2, plus 5, 7, 473 in our third scenario. Okay. Again, so this one we're paying based on exactly what they worked. Now, obviously this second method, or I'm sorry, this third method, we haven't got to the second method yet. This third method requires more record keeping for the employer, right? You've got to keep track of when they worked what jobs, right? It requires that, so you know exactly what they were working in those overtime hours. But it's on the money, right? It's accurate as far as the job that they performed during that time. Where'd the eraser go? All right. The second method is a weighted average. And what we're going to do here, in the second method, we calculate the total earnings for all of the jobs. This is where we're going to use that other, I told you there were two methods of calculating overtime. We're actually going to use this other method in this calculation. It's called the overtime premium method, and we're going to go through it in more detail, but we get a little preview here. So we're going to calculate total earnings for all jobs, and then we're going to divide that by the total number of hours worked. What we're doing is we're trying to calculate what the hourly rate is for purposes of overtime, okay? So if we do this, we said, what was it, 21 and 21? So we're just going to multiply that out. So this is 210. This is, what is it, 200 and, what's 12 times 21? So, oh, wait a minute. 12. Why can't I do that in my head? Can somebody else do that in their head? I need an extra calculator here. So 252. So 252. We're going to add these two together. 462. Then what we're going to do is we're going to divide it by the total number of hours worked. We're going to divide this by 42. So 462 $11 an hour. That's going to be our overtime rate that we're going to use. So in this case, we'll do $10 an hour times 20 hours, 200. $12 an hour times 20 hours is, well, actually, I'm doing, okay, forget about the overtime premium approach. I'm going to do it this other way, which is 240. And then we're going to take $11 an hour times 1.5 times 2 hours. So our overtime rate at $11 an hour is $16.50. So what we did with the 11 is we figured out what the average rate was between those two rates based upon the number of hours that they worked. We needed to get that in order to calculate what the overtime rate is for those hours. So the overtime rate that we're using is a weighted average of the rate that they earned. So this is 16.5 times 2. So $33. So in total, 7. Oh, same thing here as this one, if I did my math right. Is that right? 32. Yeah. So this one, it's not always going to end up being the same. Well, oftentimes, the reason I think that it ended up being the same is because we had an equal number of hours between both of these. So that's why it ended up being the same. If it were 20 hours in one and 22 hours in the other, then it would be different. But we'd still do a weighted average of the two amounts. And I've got in here, must have. So this is one of those whiteboard images that I put it in here, but you have access to all of the whiteboard images in one spot. That gives you a step-by-step guide on how to do this second one. I don't think you need a step-by-step guide on how to do the first or the third, but I gave you a step-by-step guide on how to calculate the second method. So again, calculate earnings from all jobs. So in this example, I've got, there are two different rates. Well, I guess it's the same number of hours though. So calculate the earnings from all the jobs, and I use the overtime premium approach here. I want to go through the overtime premium approach with you and then maybe come back to this slide to show you how that works. We're going to come to the same result with the overtime premium method. What we're doing essentially is we're going to take that 462. I'll show you how this works. We're going to start with the $462. And then what happens is our overtime premium is the difference between our overtime is 0.5 of this, which comes to $5.50 an hour. So we'll have 2 hours times 550. Let's put this over here. 11. And it comes to 473. I'll go through that overtime premium approach. I just wanted to explain it a little bit because I did use the overtime premium approach here. So 23 hours for each of these jobs. One of them's at $10 an hour. One of them's at $15 an hour. So calculate the earnings from all of the jobs, not taking into account overtime rates at this point, $575. Step 2, we take the step 1 result and divide it by the total number of hours worked. In this case, it was 46 hours that were worked, so we're going to take the 575 divided by 46. We get $12.50, so that's our weighted average rate. Step 3 result, step 3, we're going to take the step 2 result and multiply it by 0.5, which is what I just did over here. So in this case, $12.50 comes to $6.25 an hour. Step 4, we're going to take the step 3 result, the $6.25, and multiply it by the number of overtime hours, $37.50. And then in step 4, we add the step 1 plus the step 4. So $575, the total pay plus the overtime premium of $37.50 to get the $612.50 in this case. Questions? No questions? You just have to do it yourself, and I understand that. Yeah?
Out of the 3 ways we can calculate that, which one do most companies use?
You know, I don't know which one most companies would use, but the one that they use, they can use whichever one they want. It just has to be an understanding between the employer and the employee. The employee has to understand how they do that calculation before they actually implement it. So there just has to be open communication about it, but the employer can use whichever one they want. I would think that most employers are probably going to use whatever's most beneficial to them, which, you know, in this case would be one of these two. But again, it's going to vary depending upon the total number of hours and what the pay rates are, which one is most beneficial. But obviously, the first one, where we're just going to use the higher rate, that's always going to be the priciest. I mean, but it depends, you know, if you've got a workforce that is, you know, you really value them and you want to keep them happy and all that, then you might choose to use the higher rate, right? So, or they might choose to be just whatever is easiest. And probably, the first one or the third one are probably the easiest to do, either one of those. All right, so we've got some other examples here that we can look at. different pay rates. So we've got Oshiko, worked for Tinto Incorporated in job A and job B. For job A, he was paid $14.50 an hour and worked 37 hours at this job. Job B, he was paid $11 an hour and he worked 6 hours at this job. The overtime is 3 hours. So in this case, we really don't know which job he worked overtime for, right? So that would probably, if you also don't know which job accounted for the 3 hours of overtime, then obviously you're probably going to have to use the first method. Or I guess you could use the second method. You just couldn't use the third method in that case, because in that case you've got to keep track. So we take his method 1, his regular pay. Again, this is just at the higher rate. Regular pay, $14.50 times 37 hours, plus $11 times 6 hours. So total pay, or total regular pay, would be $602.50. And then we're adding the overtime premium at the higher rate. So we're going to take the 0.5 of the higher rate times 3 hours, the overtime premium of $21.75, and then add those two together in that case. All right, second method. Same pay. We're going to start with that same regular pay of $602.50, which we calculated right here. So you can start with that number. We're going to divide that by the total hours of 43, so including the overtime hours there, 43, to get a regular rate of $14.01. And then we'll take the overtime premium, $14.01 times 0.5, $7.01. That's what we're going to use to calculate the overtime premium, $7.01 times 3 hours, and then we're going to add that to the $602.50. The third method, again, we're going to start with regular pay and add. So here they're telling us that the overtime premium is at the job B rate. They didn't give us that information initially, but using that information then, we'll take the overtime premium now would be $5.50 an hour because it's the job B rate, which is $11 an hour. So half of that for 3 hours, $602.50, so it'd be $619. So in this case, so you've got $619 versus $623.53 versus $624.25. So we've got 3 distinct pay rates for each of these, right? So in this case, method 3 would obviously be the most advantageous for the employer, but method 1 would be the most advantageous for the employee. I want to talk about that overtime premium. I don't know if I accidentally skipped over it somewhere here. No. All right. No, hold on a second. There used to be a slide that explained the overtime premium. Hold on just a second. All right. I think it was up here. Or not. All right. It'd be nice to use that, but it doesn't look like they've got that slide in here anymore. But we'll go ahead and I'll talk about the 2 different ways of doing the calculation. So we've had two different ways of calculating overtime. Both of these methods result in the same answer. But as you can see, there are certain instances, like in these examples, where we're going to use the overtime premium method as opposed to the common method. So the common method, this is for the overtime calculation. Well, this is to whether we're going to use, it is the overtime calculation. But the common method is where we're going to take the regular rate, I should say the overtime rate calculation. We're going to take the regular rate times 1.5, and then we're going to add regular pay plus the overtime pay. So regular rate times 1.5 is going to give us our overtime rate. For the overtime premium method, we're going to take the regular rate times total hours and then for the overtime rate, we're going to take the regular rate times 0.5 to get the overtime premium rate. And then we're going to add the regular rate plus overtime rate that we have calculated. All right, so in this case, for the common method, we're multiplying by 1.5. For the overtime premium method, we're multiplying by 0.5 to get the overtime premium. Now let's do an example of both of these methods here. I don't know how to use that thing, so I'm going to have to. All right, this over here. Okay, so in the first one, let's say we've got, well, we'll just use the same example. So $10 an hour, and the employee worked 43 hours. So in the common method, what we would do is we'd subtract out the 3 hours of overtime. So we're going to take 40 hours times $10 an hour, 400. And then we're going to take 3 hours times times 1.5 times $10 an hour for our overtime rate. So what do we have? 15 times 3, 45. So here's our regular hours. Here's our overtime. We add those two together for 45. If we're using the premium, the overtime premium approach, what we're going to do in step 1 is we're going to multiply the 43 hours. So here's the difference. We multiplied by 40 hours here. We're going to multiply by 43 hours here times the regular rate, $10 an hour, which equals 430. And then the second step, we're going to take the 3 hours times 0.5, not 1.5, but 0.5 times 10, which gets us to, so 3 hours at $5 an hour is 15. And we're going to add those together, and we get $445. So the difference between these two is here we're only multiplying the regular hours by the regular rate. We're separating out those 3 hours and multiplying those by the full overtime rate. Whereas in this case, with the overtime premium approach, we're going to take the total number of hours, multiply it by the regular rate, and then we're going to take those 3 hours of overtime, we're going to multiply it by the overtime premium. They end up the same because that one that's up here is baked into this calculation. Okay, so you're going to get the same result for either method. If you're doing the calculations, if you have a problem that asks you to do it both ways, if you end up with different answers, you've done something wrong. It always has to be the same. Does that make sense? Yes? Okay. I think I have a whiteboard image as well that explains the overtime premium and the common method. I'm sorry, I thought there used to be a slide that explained it, so that's why I was looking for that. All right, is it 138? Let's see where we are. Oh, not too bad, 8 hours, 8 minutes off. All right. Questions so far about any of this? All right, so we know the difference between exempt and non-exempt employees. We know the 3 methods that we can calculate overtime if we've got an employee who has who works at different rates. We know the difference between the common method and the overtime premium method. Now what we're gonna start doing is how do we convert a wage, a period wage, so how much somebody in total has made during the period, to an hourly rate. We need to do this if we have an individual that is salaried, but they're entitled to overtime, because we've got to calculate what that overtime rate is. So for example, we've got somebody they've got a salary of $30,000 a year, but they're entitled to overtime because they did not fit into one of those exempt categories. So we've got to pay them overtime. And they're paid on a weekly basis, and they worked 43 hours during the week. How do we calculate, at what rate do we pay them for those 3 hours of overtime? We know what we can pay them for the regular rate because it's just their regular rate of pay. But then the 3 hours of overtime, we've got to pay them. We've got to calculate what the overtime rate is in order to calculate how much they're due for overtime pay. So there are some steps to doing this. So we're going to annualize their salary. That means we're going to figure out what they make on an annual basis. So for example, if we know that they're paid $2,000 a month, to annualize that, we would multiply it by 12 months to get their annual salary, $24,000. That's what we mean by annualizing that salary. Then we're going to figure out what they make on a weekly basis. Remember, there are 52 weeks in a year. So whatever we've annualized, whatever result we have here, we're going to divide it by 52 to get what they make on a weekly basis. We're going to calculate what their hourly pay is. So, for example, if they worked those 43 hours, or if they normally work 40 hours a week, then we're going to take their regular weekly gross, divide it by 40 to get to what their hourly rate is. Then we're going to calculate their overtime rate. Now here they're using the common method times the 1.5. And then we're going to add the overtime pay to our regular gross. I'm going to show you a little shortcut. It works for individuals who work 40 hours a week. Okay. Let's go through this first example first before I share a shortcut with you. All right. So Farron is a non-exempt employee. So not exempt from the FLSA is entitled to overtime for hours over 40. He gets paid $1,500 a month. That's his salary. But he's entitled to overtime. He's paid on a weekly basis. So he gets paid $1,500 a month, but he's paid on a weekly basis. He has 43 hours in one pay period. Calculate his gross pay. So our first step here, we've got to annualize that salary. So we're going to take the $1,500 a month that he makes times 12 months. He makes $18,000 annually. Second step, we're going to take that $18,000, divide it by 52 weeks in a year to find out what his weekly salary is. He makes $346.15 a week for working 40 hours. Now we got to figure out what his hourly rate is based on that. So we'll take the $346.15, divide it by 40 hours because that's what he's contracted to work, is 40 hours, right? So on a normal week, he's making $346.15, but he worked overtime this week. That $346.15 comes out to $865 per hour. So we can use this to calculate what his overtime rate is. $865 times 1.5, his overtime rate is $12.98 per hour. So what he's going to make this week is his regular weekly gross of $346.15 plus those 3 hours of overtime, $385.09. We're adding those two together. Now the shortcut that I wanted to tell you about, if somebody's working 40 hours a week, you can condense this into one step rather than two. Because 40 hours a week times 52 weeks is 2,080. Now this only works if somebody's working 40 hours a week. If you can remember though, 2008, well, it doesn't only work, but it's easy. This is easy to remember because most people work 40 hours a week. So you just have this in your head that the normal number of working hours for somebody who's working full time in a year is 2,080. So for example, if we know he's $18,000 a year, we could divide that by 2080 and just get his hourly rate. Whoops. $865. So we can break that down into one step, go from here to here. If we know that 2,080 hours is the normal number of hours in a work year. You don't have to use that. You can do the extra step. Not a problem. Just kind of sharing that with you that a little extra or no extra charge for that. Okay. Let's look at the next one. So, Eve is a non-exempt. This is where it's really important to read these problems carefully, by the way. Okay? You got to understand every bit of what's going on here because then if not, the calculation will be wrong. So, Eve is paid $2,000 a month. That's her salary, $2,000 a month, but now she's paid semi-monthly. The previous one was paid bi-weekly. So the calculation would be a little bit different in that case from this one. Eve worked 4 hours of overtime in one pay period. Same steps. We're going to annualize the pay. So she gets $2,000 a month, 12 months, she's getting $24,000 a year. What she normally makes on a semi-monthly basis is $1,000. We take the full $24,000, divide it by the number of pay periods. So she's getting $1,000 every other month, or twice a month. See, even I messed that up. Then what we're going to do is figure out what her weekly rate is. Now, this is the reason we did this extra step in here was because ultimately we're going to have to add the overtime to what she normally makes in that pay period. I don't know if you noticed that. That was kind of an extra step from the last one. So we're going to take 24,000 divided by 52. She makes $461.54 a week. Now, obviously, semi-monthly, except in February, where we've got 28 days, normally that's going to encompass more than 2 weeks. It's going to be 2 weeks and a day or 2 days or something like that. So we'll divide it by 52 weeks. So she makes $461.54 a week. We divide that by 40 hours, which is her normal, how much she works. So she gets $11.54 an hour. Now we can calculate what that overtime rate is. We can't do that until we get to this point. We got to figure out what the regular rate is. So $11.54 times 1.5, she's making $17.31 in overtime. Now we're going to take that $17.31, multiply it by the 4 hours of overtime that she worked, and then add that to her normal pay of $1,000. In this pay, she's making $1,069.24 gross pay for the month. Questions yet? Okay. Let's go to another one. Number 3. Now we've got G, a non-exempt employee, $2,200 a month, paid biweekly. How often is biweekly? How many pays are there in a year if you're paid biweekly? Biweekly. 26, right. So every 2 weeks. Yep. Weekly would be 52. I'm glad you remembered that. Biweekly, there would be 26. So she is paid biweekly. So there's 26 pays in a year. The first one was weekly. I said biweekly. The first one was weekly. The second one was semi-monthly. Now it's biweekly. So annualized $2,200 a month times 12 months, $26,400 divided by 26 pays, $1,015.38 for 40 hour or for regular. I guess it would probably be, yeah, she'd probably be 40 hours or 80 hours, I guess, for the $1,015.38. For a weekly rate, $26,400 divided by 52. Again, this is where we could skip this step if we wanted to, because we could just take the $26,400 and divide it by 2,080 to get that hourly rate. But we still need to know how much she's paid on a biweekly basis. So $26,400 divided by 52 weeks, so she's paid $507.69 a week. Comes out to, for a 40-hour week, $12.69 an hour. Now we can calculate what the overtime is. Times 1.5, $19.04. She worked 11 and a half hours of overtime. So we're going to multiply that times the $19.04, the overtime rate, add it to her regular pay of $1,015.38. Her total gross is $1,234.34 for the pay period. Let's see if this one, no. Let's play around a little bit. Let's just say, what time we got? I'm going to give you one. I want you to work on it and see what you come up with. Okay, we've got an employee who makes salary per month is $3,500. They usually work 40 hours normally per week. Paid, let's say weekly. And they worked 8 hours of overtime. Can you use the steps to tell me how much they made then this week? I'll do it on my end too. I don't know what the answer is off the top of my head. Calculator. So and I don't have a calculator on me. My calculator's over there. Eight hours of overtime, right? 1,015? 50? 50? For the total wages? Okay. Let's see. Anybody else? We'll wait a minute and see if others can get the same to verify as well. That's just kind of a reminder of the steps over there. Anybody else get an answer? I'm gonna have to find a calculator. Anybody else want to venture a guess yet? Okay. Well, let's go through it together. So, our first step is we have to annualize the salary, right? How do we do that? What's the calculation here for annualizing it? Right, $3,500 a month times 12 months. Which gets us what, 42,000? All right, so there's our first step. second step here. We need to figure out what she makes during a regular pay period. So 42,000 divided by, she's paid weekly. So how many pay periods are there? Yeah, 52. So we're going to divide it by 52. So what is 42,000 divided by 52? What was that? You can... Yep, 807.69 per week. So this is annual. All right. Third step. So normally this is what she's going to be paid on a weekly basis, 807.69. Step 3. Now, and we can, the reason she's weekly, so we don't have to kind of do this separate step here. We would do this if they're paid on a different frequency, but because she's paid weekly, this kind of condenses both steps into one. So on an hourly basis, 807.69 divided by what? 40, right, 40 hours a week to get her hourly rate. So 2019, is that what you got? Yeah. So 2019 per hour is her hourly rate. Now we can figure out, this is her regular hourly rate. We can calculate what her overtime rate is based on that. So we'll take the 2019 times 1.5. And what do we get there? So 30.29, did it? Was this is her overtime hourly rate. Okay. And then step 5, we're going to take her regular week, 807.69, plus the overtime, which we've got to calculate 8 hours at this overtime rate, right? 8 times 30.29. All right. So 242.32 plus 807.69, 1050. And I got 1 cent, but due to rounding, sometimes you get a little bit of a difference. So well done. So her total for this pay period, $1,050.01. Where did you guys get hung up? What part? Okay. Okay, so this first part here to get it annual, so that, and then you divide it by the, gotcha. Yep, you got to annualize it first. Make sure you get that annual amount first. Do I need to do another problem, or yeah, I got a yes. Okay, let's make up another one. Okay. Let's see, so salary a month is $42.15, 7.25 hours of overtime, and paid on a bi-weekly basis. I'll give you a few minutes to work on that. Since I don't have a calculator, I won't work on it, but we'll work on it together. Give you till 2:05. Let's see if my yeah, 2:05. One more minute. All right, let's take a look here. Anybody get an answer? Yeah. 2068. All right. Anybody else? Okay. Anybody else? Okay, let's see who's closest without going over. All right, so first thing we're going to do is annualize it. So what's the calculation for that? How do we know what she's making on an annual basis? Yep. 4215 times 12. 5580. Okay, annual. Great. All right, second step. Now we got to figure out what she's making on a regularly on a bi-weekly pay period, right? So how many pays? 26. Yep. So we'll take the 580 divided by 26. So what's that come out to? 15? 19. 1940.28? 38. Sorry. Whoa. Per. Yes. Last time we did 52 and now we're doing 26 because the last example, the person was paid on a weekly basis and there are 52 pays in a year for weekly. This time she's paid bi-weekly, so there are 26 pays in a year. Okay? So she paid $1945.38 bi-weekly. All right. Now we need to figure out her weekly rate. So we can take 580. Now we can do divided by 52. We could also take that and divide it by 2 if we wanted to, right? Or we could take this and divide it by 2,080 to get her hourly. But that's what we're aiming for here. I'm sorry, this to get her weekly, not her hourly. So what do we get here? What's the 5,580 divided by 50? 972.69 per week. Now we're going to use that to figure out what her hourly rate is. So 97269 divided by 40 hours. What do we get per hour? Yeah, let's round that up to 32 because I get 31725. Your problems will tell you where you should round. Like it might tell you not to round at this point. So be careful of what the problems, your homework problems say. I'm going to say, let's just round it at this point, 0.32 per hour. Now we can figure out based on that 2432 what her overtime rate is, right? So step 5, we're going to take her regular bi-weekly pay of $1945.38. Now, what's that? Yeah. I think it is about that. Yep. So she worked 7.25 hours times 24, whoops, I want a decimal there. 2432 times 1.5. Right? So we're going to add those together. So 2432 times 1.5. Whoops, I did something wrong there. 3648, and she worked 7.25 hours. So, what's that? No, at this point you'd want to, if you're rounding it to the penny. Yeah, not to the tenth. Yep. Times 7.25 hours, 264.48 of overtime, plus 1945.38, 2209.86 is what I get. Unless I did something wrong. Because I know you guys got different answers from me. Did I do something wrong? Step number 5? Okay. So, okay. So, and then we had a different number too. Did you, where did we differ? Yeah.
I think I got annual salary divided by 26 and divided to 2 and then to 40 directly.
Oh, okay.
I do that to make the 40%, but I got the one from that to do that. So
Yeah.
I put my answer is $23.86.
Oh, yours was 2209?
Yeah.
83. Oh, okay. I wrote it down wrong then. You're right. Yep. Just a different rounding. Yeah, different point. Okay. All right. Lots of steps there. The hold on a second. About out of time here. I want to show you where those whiteboard. So we'll do this. Yeah, we only got through about half of it. Under the modules, link to whiteboard images, and then click there. So, let me see. Oh, I guess this is the same. There's nothing, I put it up there already. But the salaried, non-exempt, there are a couple others that we would use. Oh, I guess the overtime calculation is there. But as we go through the semester, if there's one that I like, there are a couple other that will pertain to this. Like this, we'll talk about this salary plus commission, how to do that calculation. And this piece rate earnings as well. We'll talk about this. Exempt versus non-exempt. So here's an example. So if they're exempt, no overtime, minimum salary is $6.84 a week. Non-exempt, overtime over 40 hours, they get a minimum wage of $7.25 an hour. And with non-exempt, they could be hourly or salaried. Some of these others are for like when we get to calculating federal income taxes withheld. Okay? All right. Didn't get nearly as far as I wanted, but that's all right. We'll get it all in. Questions? You can send me an email. In fact, right through your homework, there's a Ask the Instructor, and that's a really great feature because then I get a copy of exactly what you're doing and can see in much more detail where you may have gone wrong. And it saves you as well having to go through writing all the details out about the problem. Okay? Yeah. All right. Well, hopefully we'll see you on Wednesday. Fingers crossed. We're supposed to get a snowstorm. They used to never cancel class. And now, since COVID, it gets canceled whenever the schools get canceled. Like,